The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Stan Harley as our guest at the break. We always enjoy having him on. Later this week, we will have Arch Crawford and also Rich Anderson later this week. And then next week, we're probably going to have Tim Bost on from Florida. He's a financial astrologer we had on, and he has a new book coming out on trading cryptocurrencies using astrology, which should be very, very interesting. So we'll keep an eye on that, of course. Now, the first chart we're looking at today is the chart of the DAX on a daily basis. Remember, folks, the FTSE is closed today, and so we'll just keep an eye on this DAX, and you'll see that it's right at the 61% retracement as we speak. If we look at this on a smaller term basis, you can see the ABCD pattern at a 1.27 expansion in there, and that's pretty much what we're looking at to see if that's going to complete up in this area. It's still a little bit early. Now, we've had a couple of questions about one of the stocks that used to be really big. Actually, it was just one question, but it really brings up an interesting point, and I wanted to bring this to your attention. This is the stock of Sears, folks. This stock used to be $150. It's now trading at $3.30. And that's a little bit cheaper than $150. This is basically because they didn't see what was happening with Amazon. They had quite a few years to take care of it. If you'll notice the high that it made, it was actually in January of 2007. It topped long before the rest of the market. At that point, you can see a beautiful ABCD butterfly pattern right at a 1.618 expansion. And this is a weekly chart, folks. So this is a very, very powerful pattern. And then, of course, you've seen the market just continue lower and lower. The reason why this chart was sent to me, the person was still in this Sears stock, and they asked what to do. Well, you're basically looking at something that's most probably going to go to zero, because if you look at the ABCD pattern from 2006 into 2008, you'll see the 61% retracement takes you back to $100, well, not $100 a share. And if you do the ABCD math on this, it goes to a negative figure, and that's not good when you have a negative figure with stock. So the problem, folks, if you're going to trade a stock like this, there's nothing wrong with picking some buying points on the way down. But for heaven's sakes, this market, it had lower tops and lower bottoms for 8 years. There ought to have been some place in there where you got to call, you have to scream uncle, because even though the patterns might, look, really interesting, then who knows? Yes, there's been bills talking about the real estate play, and I understand that Eddie Lambert basically locked up the good real estate. I don't understand any of it. All I do is hear about the news, and I don't listen to too much of it. But the same thing happened with Piggly Wiggly stores a few years ago. They went bankrupt, and they had real estate all over the place. And when it went bankrupt, you could buy the stuff for 50 cents a share, and it later reverse split, and it actually turned out to be pretty good just because of the real estate. But Sears does not look good on the charts. It just really doesn't. I mean, it's certainly a weaker than market stock. We have to pay a little attention to that, that's for sure. Now, there's another one that's really interesting in here, and that is where we are right now. This is something that we ought to not. I don't want to bring that one up because it might be something that we could talk about a little bit later. But I wanted to bring this next article up from our good friend Jim Flanagan at GAN Educators. And basically what Jim is talking about here is the average true range, the ATR. This was something that Larry Williams brought to us many, many years ago. And he's showing you that in fact, I should read this because the folks that are, don't have access to it, In other words, since establishing the January 26, 2018 high, the 0.56% average true rain has increased to 1.67% as of May 4th. Average of the last 68 days. This is almost identical to the 1.69% reading as of January 18, 2008, which was 60 days out from the October 11, 2007 high. In other words, market volatility has tripled, and we can see that each day as we see the Dow jump around. This means the crowd psychology is now quite sensitized, which indicates it's more susceptible to fear and panic. I think it's always susceptible to that. This bolsters the argument that a break of the February 9th low would be a legitimate bearish indicator. Well, I think that is the understatement of the year if that would happen. But right now, we're having a pretty good rally in these areas, so we'll see if this is going to be something that will be come to fruition here down the road. But we'll watch it, and we'll see what's happening. We had this huge rally here in the stock market. Let's just take a quick look at the we'll bring up the New York Stock Exchange Index here, so you'll be able to. Let's do it this one here. Hold on. Let's do the Dow Jones first because it's been the strongest, and we'll bring it up here to see it because we've had a really big rally here since Thursday and Friday. We rallied over 800 points in the Dow Jones. It's still basically in a downtrend. Whether that's going to continue or not, I don't know. But it's had 3 straight 618 retracements. Very, very strong rallies, and then they've sold off. But you don't know what's going to happen next, and that's why trading, can be a whole lot of fun, and it also can be a little bit frustrating. I think the thing that really pays the most attention today is what's happening in the foreign exchange markets. That also transposes over into the bond market and also into the gold market. And I wanted to talk just a second about the gold today because it's got a very interesting scenario of what could happen here. Let me, shucks, I got to do that. I got 2 other questions that I've got to handle too. Holy moly, there it is. I hope, nope, that's not it either. Hopefully we can find it here. I guess I can't find it. Well, we're not going to worry about it. Son of a gun, I did this and I can't even find it. Well, let's move over to Deutsche Bank because we had a question about Deutsche Bank up here, and I'll bring it up. This is the stock of Deutsche Bank. If you remember back in early January, they offered the stock at a 35% discount. And as you can see, it's eaten up all that discount plus some. And we're right down here very near the 78% level at 1350. Below 1350, folks, it'll look just like Sears on the chart. Remember, Deutsche Bank is the leading counterparty risk bank. In other words, they take other sides of these trades that many other banks don't do it. That's one of the reasons why the stock has been hit so badly. So watch that price of $13 a share at Deutsche Bank because if we get below that, that's going to probably cause some problems in some of these markets. Now, I've had a question about the tariffs. Folks, I know nothing about tariffs. I just look at the charts. I think most of the stuff you hear in the news is all baloney, and the rest of it is sweet Italian sausage. So who knows? We're going to take a little break here. 877-927-6648. Stay tuned. Stan Harley will be our guest at the break.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Talk a little bit here about Bitcoin this morning. As you can see, Bitcoin has been in a really tight trading range here between just about 10,000 and 8,000 over the past 2.5 weeks. We almost hit $10,000 a share last night. We got up to 9,993. I backed off a little bit, but this is beginning to look sort of a bullish pattern, folks, because after we've gone up here, every other time we've hit these key ratios, we backed off quite a bit, but this time we're not doing that. And so there seems to be some high-level consolidation here. Now, this could change overnight, of course, but it's certainly acting a little differently than it has before. So we'll keep an eye on it just to see what happens. Cryptocurrencies are in the news almost every day now, as usual, but now it's coming more and more to the forefront all the time. And so there's also some indication that Goldman Sachs has opened a cryptocurrency trading desk. So whether that's true or not, remains to be seen. But that's the way it looks like from this level right here that we're watching. As regards to the foreign exchange market, folks, we are at some very, very critical levels here. I wanted to bring this up to show you by looking just at the U.S. dollar index. You'll be able to see that over the past 9 months, we've had two really major rallies here. One into September, October of last year, and then we just had one from March through May of this year up around this 92 level, 92.70. I believe we're close to that this morning again. So this is a really important area because you're right at a 61% retracement of that move. Plus, those are equal moves that you see there, folks. Those are they should be. You should pay attention to those because that's how parallel channels are built, are on these equal type moves. So any move above 9,300 in the euro would really be, in the U.S. dollar index would be very bullish to the U.S. dollar index. It would be bearish in the euro. That would mean the euro would have to give below the 119 level in the euro. Now we rallied up to the 78% level of yesterday's high overnight. That was up at 119.73, and then we've come down and we've made a new low. We went below 119 for a short period of time, then we bounced back above it. So that's a really key level that we're watching here. in the euro at that 119 level. That has also strong implications on the gold market, because if you want to have some fun and listen to what Twentyman said once, and that is defy human nature, do the work yourself, why don't you pull up a gold chart and then overlay it on the dollar versus the euro, and just to see the correlation that is there. It'll actually knock your socks off, because its correlation is about as high as anything you're going to see in intermarkets. So that means that U.S. dollar index and the euro are also correlated to the gold. So he who has the gold makes the rules. So pay attention, to that, because it could be very, very interesting, out into the future. Now, we had an interesting thing happen last week, thanks to our good friend Mr. Z in the Den brought this to our attention, and that is the low last week that we had on Monday was an exact 78% retracement of the low we made in December, to the exact penny, folks. That came in at 16.08 per ounce. Mr. Z was talking about that. We had taken out the lows from March by 2 cents. We didn't go anywhere. And as you can see, we closed in the upper part of the range that day. The next day, it just took off, and we've had a rally up to the 1660 level, well over 50 cents an ounce, but it hasn't really gone anywhere since that time. And right now, it's down just a penny or two on the day. So pay attention to the silver market, because it's got a real chance in here to really possibly do something, really, really exciting. Whether that'll happen or not, I'm certainly not sure of. But another one that you ought to take a look at, I'm just going to bring the platinum chart up. But here, I can't do all of these, folks, because I just don't have the time. But if you'll look at the this is a daily platinum chart, and it just shows you there's a potential bear trap, much like we had back in July of last year. But if you want to look at a really great cycle, I think this is something that you ought to do on your own, so you learn to see how some of these cycles work. But go back and do a weekly cycle chart on platinum, and you'll see that as of last week, that was a perfect 42-week cycle bottom coming in. It was so symmetrical that you just you can't make that stuff up. So it's very, very important, that low we made down there at 896 in the platinum, because that's and it's up on the day with gold was down, but now it's coming back a little bit. But that's a very important number in the platinum. So we need to watch that with a little bit of interest anyway. Now, we've had a question about the corn market, because we've had a real interesting pattern here in corn. I wanted to bring this up. Simon only brought this up last Monday, and that is we're looking for a potential sale up there at that 1.27 level at 422. We're now trading at 418 this morning, and all we're looking for here, folks, is a sell-off down around that 409, 410 level. This is a very bullish chart for December corn. So whether it's going to happen this way or not, but boy, every time it's backed off over the past 3 or 4 months, it's been a buy, and I would not want to fade the other side of that, because every time it's done that, it's had a really good rally. So this is the type of trade that you want to watch very, very closely, because if we run into a weather market in the corn market, we could see some really fireworks where we could get up to that $5 a bushel level or higher, which Simon only and also Rich Anderson talk about, that they could easily, get to that level. If you remember, just recently, just a couple of weeks ago, we were looking at coffee down there at the 117 level, and that's had a monster rally in coffee. It was really a considerable. We'll just bring this up to let you folks take a look at it, but this was a huge move. We had the false breakout, you see, where we took out the lows from June of last year, and what we do, we snapped above it really quick. That tells you that there was no follow-through, and then away we went. We pulled back right to the 61% retracement once, and then we went up, and the high we made last Friday was right at a 61% retracement. So you'd be looking for a sell-off in coffee here sometime over the next 4 or 5 days, and it might give a very low-risk buying opportunity. And that doesn't mean you have to know anything about coffee or anything. Just look at the charts and see. The problem with coffee is it's a very high margin. I mean, it's one of the higher margin things that you can look at. So you have to be a professional, but if you want to trade coffee, it's certainly liquid and it's active, but it does have high margin requirements. I prefer to stay away from it, and I have for the past 46 years, and I'm not going to start now, but the pattern is what's interesting. We saw the same thing in cocoa with our good friend Mr. Z again, way back in January. He pointed to a absolute beautiful bottom down there, and the market rallied from 118, from 18 all the way up to 28 and change. So that's what we're really watching here. So let's pay attention of it. And that's about it. No, it's not going to be 104 today. It's only going to be here about 96, but it's still a little warmer. 877-927-6648. Stay tuned for Stan Harley of the Stan Harley Stock Market Letter.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Stan Harley Stock Market Letter. Stan, are you there?
Good morning, Larry, from Phoenix, Arizona.
Good morning, and what is your temperature going to be there today, young man?
Oh, I think it's going to be a cool 104 here today.
Is it going to be that hot there? Well, you only get to be about 94 down here in the mountain area of Tucson, but 104 is pretty warm.
It's just
Yeah.
getting nice and warm and toasty.
Yeah. Do you and your wife like it there? I mean, you live really near Westlake Village. You lived near Thousand Oaks, didn't you, when you were in California?
Oh, I did. I lived in Camarillo, Thousand Oaks, sure did, for 34 years.
Yeah, I know we were there at the same time. I don't know if you knew I don't know if you knew Don Honus or not. He used to be at the Conti office all the time, and also Jack Fletcher. Both of those fellows died this past week. Don died yesterday, and Jack Fletcher, who was my broker for a short period of time, and both of those fellows passed away. Boy, you're going to have to write a list as we get older, because boy, you want to stay off that list, of course. Yeah, I don't want to take away from this, but your highlight of your letter that you sent out was it's going up, and boy, it certainly has been. What are you seeing here, Stan?
Larry, I think, just as a backdrop, I think we're in a bear market. A bear market, by my definition, means two things. It means, number one, we've seen a peak in the 49-month cycle, the so-called 4-year cycle. This last one truncated a bit, but they do that. On average, they're about 49 months. Sometimes they contract to about 30. Sometimes they expand to about 79, 80 months, but over the long haul, it's 49. The January 26 high of earlier this year, I do believe, was a high in that cycle, and so we're heading south. And then the decline from the crest to the trough should approximate about 20%, and I think that's what will happen. In the intermediate term, I think April the 2nd probably marked a low in what I call the 35-week intermediate cycle. That's about approximately 7 months, and we're going up right now. And I wouldn't expect to incur left translation in that cycle, meaning this current 35-week cycle will top out to the left of the midpoint, and that's what we're in right now. We're in a retrace rally. I think it could be violent and sharp. Bear market rallies typically are. I think we're going to go up and make a high and stall out, chop sideways, and then eventually head lower, ultimately bottoming, I think, about the second week in October.
Well, boy, that's as specific as you can possibly get, and we certainly appreciate it. You've been spot on. The bottoms that you've called and the tops that you've called have been really, really great. Now, one of the folks has asked a question about the fact that we have these huge rallies. I mean, 800-900 points in just a couple of days in the Dow Jones. I mean, they're not they're not experienced enough to see that these things can take off. Do you have any feeling, as the question that he's asking is, what makes you think that these markets can rally as strong as they do over a short period of time? What's your opinion on that, Stan?
Well, in my experience, bear markets are associated with very strong rallies. The volatility component of the market picks up speed in a declining environment, which is what we are in now, I do believe. And so one should expect sharp rallies, because folks think, this has just been a correction on the way to the rainbow that goes up forever and ever. And it turns out not to be that. So, yes, I would expect heightened volatility over the next several months. Maybe it'll dry up a little bit in June and July. Then I think it'll pick up late summer, early fall.
Yeah. Stan, I didn't read the question completely. The question, there was an add-on to that, and is, do you feel that this algorithmic trading or automated program trading is having a great deal of effect intraday on some of these things?
No, I don't. I don't think it has anything to do with it whatsoever. No. The cycles don't change, Larry. You and I have been doing this for a long, long time. Cycles do not change. They're not a function of computer programs. They're a function of human beings, the millions of us who trade the markets, and we have the same highs and lows as we've had for hundreds, thousands of years. That it doesn't change. So no, I don't see the algorithmic trading having any effect whatsoever on the markets. Yeah.
The one thing that we do see is that the access to news is so quickly. I mean, remember years ago we would get our charts, like what was it? Commodity Perspective would send our charts in on a special delivery on Saturday morning, and now you've got everything at your fingertips on your iPhone. You can get access any market in the world off your telephone. I mean, it's just mind-boggling at this stuff is actually working that way. But boy, it's sure changed a lot. I remember trading off of a ticker tape, back in the mid 60s and late 60s, and boy, that's certainly changed.
I was a long-term subscriber to Daily Graphs. Remember those?
Yeah.
The
Well,
blue
do I remember? Yeah.
And then my favorite ones were the MC Horsey charts, going back a long time.
Oh, sure. Yeah. And I remember those very much. In fact, Bill O'Neill's son, went to the same high school as my daughters did. And it was, we knew the family, and his partner was Al McGuire. And so we actually knew him quite well. So it was a lot of fun. But he did a great thing when he came out with his Investors Business Daily. Everybody told him he was crazy to go against the Wall Street Journal, and he knew that he could do it, and he did it. And it was turned out to be really good for him and his family. But boy, he bet the whole farm and the ranch and everything when he did that. But it worked out well for him. So that was really good to see that happening. So he's super nice fellow too. Now I wanted to bring up another let's see if I can get this next chart up here. I'm having a slight difficulty here, and I want to bring up the next one, and then I have this is about this 21-day cycle that you're talking about. Let me get this up here to take a quick look at it. And then the question that someone's asking is, what is the shortest cycle that you look at, Stan?
I look at a lot of cyclical functions in the market, Larry. The longer term we talked about earlier, the 49-month, the so-called 4-year cycle, which varies between 30 months to 80 months. Then from an intermediate term perspective, I find the dominant cyclical function is one that averages about 35 weeks. That's approximately 7 to 8 months. Now, from a shorter term perspective, there's an interesting pattern that has evolved on the market that's been averaging about 21 trading days. The low we had this past Thursday was the latest low in that cycle, and that occurred 22 trading days from the April 2nd low, which occurred 21 days from the March 2nd low. And then the cycle contracted to 14 days to February the 9th, and that was a 0.618 Fibonacci contraction, and then it expanded by 1.32 prior to that. So the cyclical function there on the chart is indeed 21 trading days, but it's like an accordion. It contracts one beat, and then it expands the next beat to regain the 21-day beat-to-beat function. So if you look at May 4th and you add roughly 21 days, if the pattern were to continue, that would give you an idea about where the next low should be, which should be sometime in early June. I also note, Larry, a subject that I know is near and dear to your heart. You and I discussed. Well, maybe
Stan,
we'll pick it up after the break.
Yeah, you bet. We got to pay a few bills. Stan Harley Stock Market Letter. We'll be right back, folks. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're visiting with Stan Harley of the Harley Stock Market Letter. Stan, you want to continue on with what you were talking about before we went on the break?
Yes, it's a subject that I know is near and dear to your heart, and you and I have addressed this before. Planetary aberrations frequently coinciding with market turns. I've looked at a lot of this, as I know you have too. You've looked at a whole lot more than I have, of course. But one aberration that I have found frequently coincides with a market turn within about 4 trading days is Sun-Jupiter, either opposition or conjunction. And we have a Sun-Jupiter opposition taking place tomorrow, late tonight. And we had a tradable turn last Thursday, certainly within 4 trading days of that event. And that's from my analysis, that's probably the dominant planetary aberration that I have seen coincide with market turns. I'm not sure how your research would corroborate with that or not, but in my analysis, that has the highest.
It is one of the higher ones, and the primary reason, from what Twentyman has told me, and of course he studied a lot of W.D. Gann, is Jupiter being the the planet of expansion, and of course the Sun, controlling everything. Conjunction means it's at 0 degrees, so those are very big. We've tested those out. Now they don't happen very often, but you're right, they do have a really strong affinity, but they do have a wide trading band. You mentioned 4 trading days. I think you could actually expand that to 4 trading days on either side of it, Stan, because it's such a big aspect that it's not going to be spot on that exact date, because it's such a big thing happening. But I think there's something there. I've always believed that, and so did Edward Dewey. He spent the last 10 years of his life really focusing, on the astro part of the cycles, and I knew that because I had spoken to Gertrude Shirk quite a few times over the years. And but anyway, I don't know about the astrology. I see bits and pieces of it, but if the Holy Grail is there, it's passed this old cowboy by. But the patterns, they can help you to get to the promised land, and that's what I'm really looking for anyway. So that helps. Hey, Stan, I have one other question that someone's asked us, and that is about the bond market. I know you do take a look at that occasionally. What's your feeling here on bonds on a longer-term basis as far as interest rates?
Longer term, Larry, I see bonds heading higher, interest rates heading lower. And looking data back into the 1800s, I see clear evidence of a 40-year cycle in that market. The last significant turn was in 1991. 1981. Prior to that, that was a high in interest rates. Prior to that, 40 years prior to that, 1940 was a low, and prior to that, 1900 a low. And just go back on the charts, and you'll see every 40 years, plus or minus about 3, significant turn in interest rates / bonds. So in adding 40 years to 1981, you get to 2021. I actually think the turn will occur in late 2022, and I think it will be a low. And that 40-year cycle will just keep on clicking. Set your stopwatch. So, yeah, interest rates heading lower, bonds heading higher. Right now, we're kind of in the low 140s on a 30-year bond, but take a look at that TLT, which is a way to trade the bonds on the equity side of the house, and it's not coming down. There's some significant divergence going on there, and that's what I would call bullish divergence. So we're setting up for a rally in bonds. Bonds have been a sleeper lately, but I think they're going to come alive here very shortly, and I think the surprise will be, when it comes, will be to the upside.
Well, that'll certainly surprise a lot of people, me included. One other question we had, and that is about the gold market. Do you have any feeling there?
Gold is just been in a sideways band. It has a cyclical component that averages about 25 weeks, I have found, and I think it's making a 25-week cycle low right as you and I speak, right in here. I think we're going to pop higher and probably move up and tag the 1375 area, and then let's see what it looks like at that point in time.
Yeah, I certainly agree with that one. That's for sure. Stan, I want to thank you for coming on today. And if the folks reach you, what's the best way to reach you by email?
Well, probably just log on to my website, harleymarketletter.com, and they can find all my contact info there. harleymarketletter.com.
And you'll send them a sample letter if they ask?
I can send them some materials, absolutely.
That's great. Listen, I want to thank you for joining us, and we're going to have you on again in a couple of weeks, but you've certainly given us some great information over the weeks, and I really enjoy the cycle stuff. It brings back so many memories. My goodness, it's like old home week. So I remember those meetings we used to have in Los Angeles where there would be 20 or 30 of us meeting on and cycles and stuff. This is when there was no information out there on this stuff. We had to get it the hard way. But
I remember.
Yeah, a long time ago. Listen, thank you very much, Stan. We really appreciate you being on, and we'll have you on again soon.
Thank you, Larry. My pleasure.
Okay, Stan Harley of the Harley Market Letter does some great work, so we'll see what happens here recently, but he's done a great job here as we look at some of these things, so we'll keep a close eye on that. Okay, the next question that someone's asked, and that is about the gold market. I've already talked about the silver market, of course, and it's done exactly what John, Mr. Z in the room said it would. It went right down to that 78% level, and we're trading around 13.13 this morning. Stan Harley said there's a 25-week cycle that could be bottoming, any time in this level. If we take a quick look here at the gold market, just to take a quick look at it, we'll see here that you have a 50% retracement there right off of the low in December, and you can see that cycle low. If you want to do the work yourself, go back to July of last year, and then you take half a year, which is 25 weeks. That gets you to December. You take 25 weeks in there, and here we come. So we're very, very close to what we could be a very important bottom in the gold market. Whether that's going to be the case or not, we'll be able to see. Someone's asked a question about, is there still a London gold fix? Folks, I don't even know. I don't see anything in the news about it anymore, but my guess, who knows? I really don't know. Mr. Z's asking the question, did Flanagan, no, Jim is too young to do that, but Peter Leidy certainly did. Peter lived in the same building as my good buddy Eddie Horowitz. They lived up there in the Hollywood Hills, and in fact, I used to go to Eddie's house all the time, and I'd go across the hall and visit with Peter. And Peter's got the most incredible chart you folks would ever see. I wish we could get it online to show you it, but it looks like a giant Torah. It's a rolled up chart of the Dow Jones going back to 1949. That's when Peter, when we was just a little kid, would start charting it. It all done by hand, and he still keeps it up. It must weigh 70, 80 pounds by now, but it is huge. I mean, it's just an absolute work of art, all done by hand, and it's really something spectacular. I'd like to get a picture of it just to show you folks what it actually looks like. But, considering, the moves that we've had recently, I imagine he's moved to a different kind of scale. So we'll see if that happens anyway. But this week we will have later on this week, we're going to have Arch Crawford. Hopefully tomorrow we're going to have Arch Crawford on. And then later in the week, we want to have Rich Anderson on again because we've had this pattern in corn that we've been watching, and also beans are selling off exactly as Cy Monley said it was going to do. So we want to watch this really closely here. 877-927-6648. We'll be right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the market very, very strong. The Dow Jones is up 160, NASDAQ's up 60, the S&P's up 14, continuing on this big rally that Stan Harley had talked about. We've got the Treasury bonds are basically down on the day by just a hair's breadth. And we've got crude oil up about $0.50 a barrel right now. We're up $1 a barrel a little while ago. We got up near to that level that we were watching in the newsletter, of course, over the weekend, right up near that exact 1.618 level. As a matter of fact, we did hit it spot on. And whether that's going to mean anything or not, I don't know, but it did hit it exactly, so we'll see if it means much. But there's a lot of support in the crude oil at this $66 a barrel level. That would be, we had a beautiful a beautiful 382 retracement there. That led to this last high that we have, so coming back to that level. But if we go back through $66 a barrel, that would be incredibly bearish. But we've been up for quite a while. If you remember, we had Bill Meridian on about a week or so ago, and he talked about oil to be topping during the first week or so, the first 2 weeks of May, and here we are. So kind of keep an eye on what Bill was talking about, because he does some fabulous work, and we want to watch, how he's handling some of these things. But he was saying around $70, $71 a barrel, and that's where we are. Whether that means much or not, we'll have to wait and see. We're seeing the same thing happening in heating oil and also in gasoline, that it's also doing the same thing. And that's something else that you want to watch, because when you're watching crude oil, you should watch the products, which would be gasoline and, of course, heating oil. Question on the grain markets. We've got time, folks. We want to wait for about another week in these grains to see if we can get them down a little bit more. That would be an ideal situation. Whether that occurs or not, we'll have to wait and see. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!